Hello, fellow traders. 'Tis I, the rumpled one. It is Tuesday, March the 12th. The year's 2019. Let's talk trading. How to trade like a pro, Breakout 201. Yesterday, we went over the breakout basics. Now let's kind of up our game and start to get a little smart about trading breakouts. And it's hard to get any smarter than using proper money and risk management. Did you like that segue? So what we'll do is we'll look at a chart that I put up. Now, let me show you the indicators before I forget, so if people want to play along, they can. We've got the 2016 frequency distribution, previous high breakout, UI, that means user input, which what that means is you can go in and you can change the levels. You see here 0 to 9 corresponds to 0 to 9. So you can fine tune it to how you want it. And so I've got one for the high, one for the low. Now, if you've got the 2017s, you can use the frequency distribution indicator I wrote, because that's kind of a multi-purpose where you can define what these are here. If it's high minus open, high minus previous high, it has all of that stuff built in, and you just choose it from a drop-down menu. And also, I wrote an indicator TRO HLBO for high-low breakout. And that's the plotting indicator that puts these dots in diamonds. So a diamond at the top means that the price broke out of the previous high. And see these red dots, that's the previous candle's high, and the blue dot, that's the previous candle's low. And the magenta dot shows that this candle broke out of the previous candle's low. So you can see there's the previous candle's low right there. And in this case, here's the previous candle's high. So you can see price broke out. So what do? We're looking at the daily chart here, because on the wick zones and just the previous daily high-low, that's one of the trades we do. That's a breakout trade that we look for on a daily basis. So for today, you can see the euro yen broke out. So we know that the breakout was going to be at 129.19 or 20. And you can see there's a huge breakout. So we look at these frequency distributions, and basically what a frequency distribution is, it tells you how often something happens. So in this case, it tells you how often when the high breaks the previous high, does it go 0 to 9 pips. Now we're looking over the last 100 bars, and you can see we used 46 bars here. So it broke out 46 times out of 100. We got a previous high breakout, and 48 times out of 100 we got a previous low. So when you're trading these daily breakouts, you've got a pretty good chance of getting a trade almost every day. Now there's some days like here's an inside bar, here's an inside bar, here's an inside bar. There are days when you don't get a trade. And that's okay, because there's more than one pair to trade. But you don't have to trade every day. This is a trade where you know it ahead of time, because you know the previous day's high and low. So before that day closes, or right as the new day opens, you can already put in your buy and sell stops. Because see, if price is going up, you're going to want to put in a buy stop, because if you put in a buy limit, the limit has to be below the current price. So back to frequency distribution, 0 to 9 only 7 times, but 10 to 19 6 times, or 13%. So you can see if this is the 15%, then above it is pretty much 85%. So 85% of the time, you should be able to make 10 pips or more on a previous high breakout. So if all you did was put your buy stop and sell stop in, and then said, okay, if it triggers, I'll put in a 10 pip take profit because maybe I can't watch the trade. Are you going to win every day? No. Will you have losers? Yes, depending on where your stop loss is placed. Because sometimes it'll test the high, pull back, and 40 pips, and then come screaming back and break through, and then keep on trucking. But this is just an indicator to show the breakouts. So you can see how profitable it is. And you can see here, using the frequency distributions, you pretty much know historically what the stats are. Now, will they change? Of course, because market conditions change, economics change. But you can see here, if you trade this actively, you've got a chance to pick up some big wins. Big wins, 50 pippers. So how many times? You got 50 pips or more, 13% plus another 4. So call that 17% at a time. But if you went for 40, now it's up to about what, 32%? If you go for 20, that's about what, 72% at a time? So you can see here, using these statistics, when maybe you should take part of the trade off, or maybe if it's up 30 pips, you'll put you'll move your stop loss, so you'll at least have that 20 pip profit at, worst case scenario. So this is showing you how to fine tune your entries, and whether or not to decide to take this trade. Should I take a daily high previous, a break of the previous high and break of the previous low? Well, these statistics tell me yes, and that's why you see that in on my charts on a regular recurring basis. Now, we can shift, we can go, well, what about the weekly? And if you look at those stats, you can see the break of the previous week's high and low, or I'm sorry, yeah, the previous week's high and low is once again a profitable trade. You know, 4% of the time it's going to be less than 10. So that means 96% of the time it's going to be greater than 10. And you can see here 48 times out of 100 for the high, 48 times out of 100 for the low. Sometimes they might occur during the same week. It breaks out the high and the low, but not always. And it doesn't seem to be a usual occurrence. And you can look on the chart and see that. I mean, here's one right here. It's got a magenta diamond and a turquoise or aqua colored diamond on the same bar. And you don't see that happen too often. But the big one is, look at this, high minus previous high over 100, almost 40% of the time on the, and almost 40% of the time on the low side. So that's not a bad trade. How would you like to pick up 100 pips or more? Now, we can also drop down. We can look at the, let's look at the 1 hour, because a lot of people like to trade the 1 hour. Well, you can see here, it's 0 to 9 pips, 80% of the time on the high side and 66%. That's telling me that those breaks, though they can be profitable, I shouldn't be looking to grab more than 10 pips, because it's, you know, the statistics are against me. So let's say, okay, so we can't, the H1 is not really tradable. So let's look at H4. Okay, once again, you can see here, 50% of the time, 0 to 9, and 30%. Now, on the high side, on the euro yen, that gives you what, 74%? Or sorry, 64%, basically 2 out of 3. Not bad, not bad statistics. It seems like that's a little more tradable. But one thing to remember is that the high on H4 is also going to be a high on H1. Just remember that. So you can see here the H1 and H4 breaks. They can be profitable, but statistically, you don't have statistics in your favor. So that's why we look at the daily, we look at the weekly, and just for completeness, we look at the monthly, and you can see here 100 or more 64, 100 or more 78. So look for the monthly highs for the breakout. So let's see. Let's just run through the rest of the charts. I got a couple of minutes left, and this computer is not being very cooperative at the time. Okay, we're looking at the pivot. Oh, we've got a missed pivot today. Okay, and all the gaps have filled. Remember, I told you Sunday night, I told you Monday, there was opportunities. If you didn't take them, that was your choice. Don't say I didn't give you a heads up. We're right around the yearly open. We poked through. We're what? 3 pips above the yearly open at the moment. And here, once again, we spoke about breakouts. This is the previous days, or this is the first day of the week's high. You see there, it broke right out the first time. Then it came back and broke out a second time. And right now you're 25 pips above it. So you can see these opening day breakouts can be profitable. And here we go, we're back above the first day of the week's open. First trading day of the year's open. We're still within the ranges of the first day of the first 2 months of the year. And I'm just going to speed through these charts, running out of time. You can see here, we got into that inside bar, we fell out, another breakout trade. Previous day, nice breakout. Only 69 pips of range today. Here we go. Holo trade, as always, profitable. Missed, didn't hit the pivot, went right through the buy zone, gave you 2 buying opportunities. And you know what, fellow traders? That's going to pretty much do it for today. So remember, breakouts. It's not what you trade, it's how you trade it. Get out there and drain the banks like a pro.